Hello, everyone. Welcome to Midweek Market Insights. This is Tommy from Ultima Markets. It's a new week. How was your trading on Monday and Tuesday? Let's take a quick look at market movements over the past 2 days and preview the key economic data and events for the rest of the week. With the US election approaching, current polls show Trump in the lead, making the Trump trade a key theme for the first half of the week. Bitcoin has climbed back to its historical high near $73,000, while gold has surged to a new peak at $2,780 per ounce. On the data front, U.S. job openings in September fell to 7.443 million, marking the lowest level since early 2021. A decrease in job openings generally signals a slowdown in economic activity, as businesses may reduce hiring in anticipation of an economic downturn. This has led traders to increase bets on a Federal Reserve rate cut. Thus, while the sentiment around the Trump trade theoretically benefits the dollar, recent data has somewhat tempered the dollar index's rise. Non-farm payrolls will also be released this week. The October ADP employment numbers, which will be released today, are often seen as an early indicator of non-farm payrolls. These figures can give the market an early look at the state of the U.S. labor market. The Federal Reserve is currently focused on employment data, so any signs of a strengthening labor market would reduce the likelihood of a rate cut, which could push the dollar out of its recent consolidation range. Therefore, Friday's non-farm payrolls data will also be significant in this regard. Beyond U.S. employment data, investors can watch for developments around the British pound on Wednesday. At 8:30 p.m. Beijing time, the UK will release its budget report. If spending plans exceed expectations, it could boost the pound. Here's why. In recent years, the UK has been spending more than it earns, which has strained its fiscal position. The market is concerned that the Treasury may tackle the budget deficit by increasing taxes and cutting spending. Such measures could place downward pressure on the pound if they dampen economic activity. Turning to central banks, Japan will announce its latest rate decision and economic outlook report on Thursday. Last Friday, Japan reported a decline in Tokyo's core CPI for October, marking the first drop below 2% in 5 months. Tokyo CPI is often viewed as a leading indicator of Japan's inflation trends. The market therefore expects the Bank of Japan to keep short-term interest rates unchanged while gradually reducing bond purchases. If no forward guidance on rate hikes is provided, the yen may resume its depreciation trend. This information is for reference only and does not constitute investment advice. This is Tommy from Ultima Markets. See you next Wednesday.